So I want to get the global outlook for you now with Yannick Naud. He is a portfolio manager at Glendevan King. He oversees a $160 million fixed income fund. We want to know what you're buying, what you're selling, and of course your thoughts on, well, latest developments in Spain. We have had the results of the stress test now. Is market patience running out with Spain's indecision over a bailout request?
Yes, obviously Spain is benefiting from the fact that everyone thinks that the ECB will intervene. It's what the governor of the Bank of England, Nevin King, called the Maradona theory of interest rate, which is the expectation of action is sometimes stronger than the action itself. And I think for Spain, it will not last very long because they've been very right to wait for the budget, to wait for the audit of Spanish banks. But I think now the market expects them to actually ask for a bailout.
And so, Yannick, one of the big obstacles standing in the way of a bailout request has been the conditions that could come with any help from the permanent bailout fund. Now that Spain has outlined the reforms that it wants to undertake in its own budget, do you see that as being less of a risk?
Yes, in fact, now Spain have the ownership of the austerity measure. It was done last week, and probably, maybe they've done a bit too much even compared to what that
creates other problems, perhaps.
Yes, but I think, the government have the ownership of it, so they will not, it will seen less as a sovereignty problem, as a loss of sovereignty, I think.
And what could trigger a bailout request?
Obviously, the way the ECB created this thing was the fact that only country will ask probably if the interest rate of its debt is going up. So if you have the 10-year going above 7%, or more likely the 3-year going above the 6% mark, it's likely that Spain will they will ask for a bailout.
Do you see that happening this month?
Well, what's happened this month? We have a bond auction on Thursday, a 2-year to 5-year Spanish bond auction. There's the regional election on the 21st of October. There's plenty of reason, plenty of things could go wrong between now and the 21st of October. And I think it's important if Spain wants to give the impression that it keep ownership of the problem and keep sovereignty, they need to not be pushed into a bailout. They should do it when they have a bit of time. And
will assistance from the permanent bailout funds stabilize Spanish and Italian borrowing costs?
But Spanish, at least Spanish for sure. There is a high correlation between the Spanish interest rate and the Italian interest rate. And I think that, Europe is committed to make sure that both Spain and Italy will be okay.
But so do you think that this will be the solution? Do you think that we will see borrowing costs coming down once a bailout is requested?
Well, I think this bailout is needed. What will happen after the bailout? We will see interest rate continue to go up or not. It's a different story. I think it will stabilize the market for a while. But as long as we have very negative economic figures from PMI and employment growth, those things are not helping. So we will need to see at one point the economic situation in Europe
improving. From what you're saying, things could stabilize for a little while, but then once the sort of underlying economic dynamics come into focus and growth targets and debt targets are being missed, that we could be in the same situation that we are now, worse.
The story in Europe is always 2 steps forward, 1 step back. Therefore, it's never an easy situation. What we know is that in Europe, there is a wide fluctuation, and the direction will depend on the economy.
Are you buying Spanish and Italian debt?
No, we underweighted peripheral country. Within peripheral, we prefer Ireland and Portugal, which are less volatile and less in the limelight, which are performing okay. Ireland didn't do so well last week because of Germany, Finland, and Netherlands trying to change the agreement of the 29th of June.
And Yannick, how do you feel about the so-called soft core countries, Belgium, Austria, and France?
Well, France has been overperforming Germany since the election of François Hollande, mainly because they fully committed to 3% GDP debt to GDP deficit.
That's not going to happen, is it?
No, because it's rely on the budget in France that was announced on Friday rely on 0.8% growth. I think the market expects 0.5% growth. We expect even lower growth. For every 0.1% of growth, it's 1 billion. So the government, French government, will have to find probably in excess of 40 billion saving instead of 30 years.
Does that mean borrowing costs will continue to come down?
It's mean that I think between Germany and France, I mean, the spread have been moving from 1.5% at the election of François Hollande, I think, to the lowest is 0.55 basis point. And now we're back to 0.7, 0.75 basis point. I think the range is about right. France should trade between 0.7 to 0.9% higher than Germany.
And you have a higher exposure to corporate instead of sovereign bonds anyway, don't you? Are you going to maintain this position? Because, of course, you've just outlined in this conversation to me a number of risks facing European nations, even perhaps the ones that are in a slightly stronger fiscal position, even if a bailout is requested, even if there is international help. And that, of course, could lead to a deterioration in credit conditions that hits those corporate bonds.
Yes, we can see, we can see in Europe that most of corporate are suffering from less bank financing, and they have to rely more on the bond market. That's why in September we get so much issuance of corporate bond. We try to focus on a company which are exposed in a growing country, mainly a Nordic country, Northern Europe, and emerging market as well. And in fact, in companies, you can assess balance sheet much more easily than you can do in banks or in governments. Therefore, you have a bit more certainty about the business and the ability to repay.
So obviously, it's about being highly selective with these bonds and always going back and having to check, whether this company is continuing to perform and whether the bonds will perform. Does that mean that you're not buying the corporate bonds of financial companies?
No, we don't buy financial companies because, we have some exposure to financial. It did very well during the summer, thanks to Mario Draghi. But in fact, again, it's very difficult to analyze the balance sheet, and there's a lot of political event that can add up to the situation. In corporate, you do, as long as you do financial analysis and you keep tracking the result of the company, you have a bit more confidence. You might be right, you might be wrong, but you have a bit more confidence about the result.
A little bit more confidence there. And I want to get your thoughts on the stress test results showing a shortfall for the Spanish banking industry of 59.3 billion euros. You were just telling me that perhaps there isn't enough transparency in the balance sheets of sovereigns and banks. Are you questioning this figure?
No, I think this is an independent figure, and as we can see today, the market is reacting. It was published after the close on Friday. The market is probably reacting on that news and the news that it looked like Greece will be able to get the bailout from the Troika.
Enough transparency in that figure for you to want to go into Spanish corporate?
Well, if you will go in a bank. Right now, no one can invest in bank trusting the booked value of any asset. Some bank in emerging market are trading at 2 times value. In Europe, here it's a fraction of that. It's very and the result you can have from 3 months result every quarter. You could have big swing of number. The credit spread of Crédit Agricole or even the share price have nothing to do about the amount of profit they're making. It's about how much deleveraging they're doing and how much asset are they selling. It's not as straightforward as corporate bond in order to analyze, in order to profit from it.
Well, it's really good to get your strategy, your thoughts this morning. A wide-ranging conversation there with Yannick Naud, portfolio manager at Glendevan King.
Thank you.
Thank you.